Palantir, or PLTR stock, just reported their fourth quarter results that were better than a lot of investors expected, causing the stock price to rally 15% after hours to around $19, $20 per share. This comes after years of execution. I mean, this company has been around for, I believe, 20 years now, and you can see consistent revenue growth. This is what investors like to see. And you can also see, this is a key aspect of the thesis, that they're becoming increasingly profitable. In the most recent quarter, they delivered $93 million in earnings. That is up 3x from the same period the prior year. So you can see they are accelerating in terms of their core profitability, which is what investors want to see. When I ask AI Ticker Chat to help explain why might the stock jump on their latest earnings results, and I select the 8K, it really captures, I think, the key essence, which is one, sustained profitability. Investors, the more that you can show consistent profitability, investors do not like, hey, one quarter we're doing great and the next quarter we're posting huge losses. Investors do like that consistency. So to say, hey, we are now on this path of consistent profitability, that is something that investors will like and will put a premium on. And also showing that they are executing with margin expansion. The key item that I think really got investors excited is the aspect that their commercial business, the U.S. commercial business, is expected to grow by at least 40% this next year. So this means they are winning. Whenever you see something like, hey, we're expecting to grow 40%, you're talking about an exponential growth rate, and you can see it. Here in this chart, you can see how their U.S. commercial business has grown by 10x effectively since 2019. In the most recent quarter, it increased by 70% year over year. When you see that type of growth rate, it means you're tapping into something that's potentially very big and that you're winning. Most industries aren't growing at 70%. So if you're able to show, hey, we are delivering on that and we're 10x bigger, it might suggest you have runway to keep on growing and that you're certainly doing something right. So from an unrivaled perspective, this is, I've heard and I've spoke with law enforcement that have pushed back saying, it might not actually be unrivaled, but seeing how fast they're growing from a commercial perspective, U.S. commercial, is a huge green light for investors. So investors do like to see this new growth story. You had some concerns about government business being slower or lumpier, but seeing this growth trajectory in U.S. commercial is extremely favorable. And I think part of the reason why investors are loving it is the alignment that Palantir is winning, partly because they are an artificial intelligence winner. And they talk about how every part of our organization is focused on the rollout of our artificial intelligence platform, or AIP. And that's about integrating these large language models with proprietary data that companies have. They talk about how they've had tremendous success with new commercial pilots. They had less than 100 in 2022. And then since introducing AIP last year, they conducted over 500. So this is the type of exponential growth that gets investors excited, thinking, okay, this is just the beginning of what could be a huge development for Palantir. And this is something management emphasizes as well. They say AIP, so this AI platform, is the future of our company. We believe that it will become the dominant platform for the entire industry. And so what investors love to see is not only the steady growth, the steady and improving profit margins, the profitability, it talks about 40% growth. What really gets investors, where it blows up their Excel sheets, what gets them so excited is when they see a reacceleration. Typically, because of the law of large numbers, what you're looking at is you say, hey, a company is growing 30% this year, maybe it's 25% the next year and 20% the following, and you sort of have this expectation of growth, cooling off over time. But what Palantir is doing here that's getting Wall Street super excited is they said, okay, well, growth decelerated, and we've seen that. And they were in a penalty box for a while because they said, hey, we're going to deliver 30% growth, as far as we can, see effectively. And that was something that was almost a direct quote from Alex Karp saying, hey, 30% years and years and years. And they didn't. They delivered under 30%. But now, and this is the part that Wall Street loves, is that they're reaccelerating. And so they're going from teens type of growth to closer to 20% growth. At least that's what they're guiding to. And that's in large part because of large language models, this AI interest that they're seeing. And so they're now saying, hey, we expect to grow close to 20% next year. U.S. commercial business growing around 40%, and also delivering around $1 billion in adjusted free cash flow. That includes a lot of stock-based compensation, so you do have to take that with a grain of salt. Management is still using this adjusted figure, adjusted income from operations. I don't care for it because it adds back stock-based compensation. If you're going to add back stock-based compensation, you at the very least need to look at what's your adjusted figure per share, because as you add back stock, you're diluting yourself. Okay, so the question is, well, where does Palantir go from here? First, a quick plug. This is not financial advice, also important for investors to understand. Also, recently on our exclusive Discord server, a member relayed to me that the Unrivaled Investing premium subscription has the best cost performance ratio. This is a direct quote, best cost performance ratio relative to alternative investing subscription services available. So if you're looking for compelling investment ideas, consider Unrivaled Investing, which includes a weekly letter and my personal portfolio updates available in real time. I also have educational materials that I designed, with the intent of saying, hey, this was really helpful. These were the key points that I learned when I started working in a multi-billion-dollar hedge fund. This might be helpful for you if you're just starting out, learn how to read financial statements or learn how to value companies. I'm also very responsive with the questions you might have in those educational materials. So looking at Palantir, I think they're tapping into a societal question that a lot of businesses are facing, which is, what's your AI strategy? For investment firms, we're hoping to grow AI ticker chat, so that's the solution for companies. And, inch by inch, we're growing. But what we're looking at with Palantir here is that they're saying, hey, these AI boot camps, these are like doing 4 months of work in one day. And this is about taking the proprietary data that companies have and helping them analyze it and be able to reach conclusions that they might not otherwise have seen. And so they are seeing very favorable feedback, and customers are saying, okay, we want to take this next step. And they've also made the point that they think their government business can accelerate, in part because, unfortunately, the world is facing more wars, more, challenges. And Palantir is leaning into that, saying, hey, we stand by Western democracies. We do not support terrorist organizations. We stand by Western democracies, and we want to support them. We want to give them the cutting edge in battlefield technology. And so they make that very clear with where they stand. And they do see that as an accelerating driver of their business. But ultimately, what's driving this business isn't government, even though government's, a key aspect of this business. It's really the commercial business growing over time. As we check in with AI Ticker Chat, once again, first month is free, to think about where can Palantir go in the years ahead. This was before the most recent earnings update, but it shows, look, if you have a range of 11 to 20% growth in the years ahead and 15 to 25% profit margins, and assume a 25 to 35 times N multiple 5 years from now, then you're not really talking about a crazy compelling return. And so as I think about how would I, sort of plug this in myself, and you can change the numbers yourself if you want to say, hey, I think they're going to deliver, 20 to 30%. So you can plug that in, and see how that would drive the returns. But clearly looking at this chart, it's just not that compelling. But I want to think about it myself, because I want to plug in the numbers. I want to say, what could this business do based on, management's new guidance, which is around high teens, around 20%? And, what would it take to deliver maybe even just break even results? And I think this is the key concern that I have looking at Palantir, which is that you assume profit margins go to 25%. They're nowhere near that. This is, I think, more than double the current profit margins. You assume their growth on a per share basis, this includes the dilution, is 26% a year. So that assumes they continue to accelerate significantly more. So that means the headline figures are probably going to be closer to 28% or 30%, given the significant dilution each year. So, keep in mind, they're only targeting around 20% growth next year. So I'm assuming 26% growth, and I'm assuming a 30 times earnings multiple 5 years out. And in this scenario, you're only really getting to around break even, plus the cash that accrues to you each year, because management expects to generate around $1 billion right now, and $1 billion divided by a $45 billion valuation, gets to around a 3% yield that effectively accrues to you. And so I'm looking at this, it doesn't strike me as super compelling. Now, keep in mind, this is a hypothetical framework. Stock price go way higher, way lower. But I would love to understand the Palantir Bulls case, where they go, oh, well, I actually think, Daniel, this profit margin could be 45% over time, and this end multiple could be 50 times. So I'd like to understand the thesis that gets you to a much higher return. At some point, I would like to buy Palantir. I'm not an owner yet. I like the fact that they're leaning into, saying, hey, we support Western businesses, we support Western democracies, we support, and so they make their positions very clearly stood, and they're also accelerating commercial businesses with AI. I think they are an AI winner. The question that I think a lot of investors need to ask themselves is how much is already baked in at the $45 billion valuation that you're now looking at for Palantir. If this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. You've been watching Unrivaled Investing. Thanks so much for tuning in.